Good morning, everyone on Facebook. Good morning. Thank you for coming. Thank you for joining. Good morning, everyone. Good morning. Good morning on this beautiful, glorious day. Thank you for joining. We appreciate you. Good morning. Good morning, everyone. Thank you, everybody, for coming on and hopping on and being with me this morning. So I appreciate you all. Good morning. Thank you.
What will they need, Valencia?
All right,
Will they need anything to participate?
no, not this session, next week.
Okay, awesome. All right,
Good morning, everyone.
Yay.
Good morning. Good morning, everyone who's joining us now. Good morning, Marie. Great to have you. Good morning. Good morning. Good morning. Thank you all for joining. I appreciate you all. Thank you, everyone, for joining. I hope you guys had a blessed night. Good morning, Cheryl. I see you. Hello. Good morning. Good morning, Naomi. Good morning, everyone on Facebook. Thank you for joining. Good morning. Good morning. I'm glad to have you all here this morning. Good morning, everyone. I appreciate you all. Good morning, all. Good morning. Good morning. I hope you guys have your coffee. Good morning, Dana. I hope you all have your coffee, your tea. You guys are ready. Good morning. Good morning. Good morning, Adam. Thanks for joining.
Good morning, Valencia. How you doing this morning?
I'm well. I am blessed and highly favored. How are you?
Every day is a good day.
Amen.
And great to see you too.
Thank you. Thank you for joining.
You're welcome.
Thank you, everyone. Thank you, everyone, for joining. Honestly, I appreciate you all.
Wake up, everybody. It's time to get up. Wake up, everybody. It's time to get up. Stay woke. Stay woke. Stay woke. It's time to get up. Stay woke. Stay woke. Stay woke. It's time to get up. We're healing, we're dealing, we're growing. Together, together, releasing. We're teaching, we're moving. Together, together, we're learning, discerning. We're striving. Together, together, we're leading, connecting, transforming. Together, together.
Okay. Good morning. That song is fire. I was in here just like, okay, stay woke. Okay, everyone. My name is Valencia Noel. I am your licensed life insurance agent. So I'm so appreciative to have you all and for inviting me into this space. So I have a 30-minute session with you guys. I do have a part two coming next week, next Wednesday. I do hope you all do tune in. So we're just gonna get right into it. We're gonna talk about life insurance, the good, the bad, and the ugly. Next slide. Alrighty. So life comes at you fast, and choosing the right life insurance protection that gives the most value for your money is more important than ever. Especially with these upcoming days, or these times with the unknown. Things do happen prematurely, and making sure that your family is properly protected is one of the key factors that you need to have in place for you and your family. So this chart here is the theory of this decreasing responsibility chart. So what we educate our clients on is, right now you have young children, you have high debt, house mortgage. So any type of loss of income could be devastating to your family. So we educate our clients that obviously when you are younger and healthier, you don't have a lot going on, or maybe you do have a lot going on, but the coverage could be cheaper. We advise our clients to get life insurance, one to cover what you have going on. So, but once you get older, you're grown, your children are grown, your debt is lowered, your mortgage is paid off, you pretty much need retirement income. The last time I checked, you can't go into Macy's with your life insurance check, right? So we educate our clients to buy term and invest the difference. Next slide. And please come with your questions, comments. So again, I have a part two where we're going to break down, the types of life insurance and everything. But I do appreciate your questions, concerns, and comments. So what is life insurance and the purpose of it? So pretty much everyone has the same goal. Everyone has the same goal. You're building your financial house, right? And when you're building your financial house, what is the most important part of your house? Anybody can tell me. You could unmute yourselves if you want to tell me what's the most important part of your house.
The foundation.
Amen. Right, the foundation. So that is what life insurance is. It's the foundation of your financial house. So while you're building that house, you need that protection, that cushion. God forbid something were to happen to you or a family member prematurely, that you can continue on your dream, your financial goal. So this is not in particular order. Everyone's needs are different, but you definitely would want to have a budget for emergency funds. Again, we see what COVID had displayed on our lives, that anything could happen. Paying off debt, everyone wants to be debt free, right? Retirement, college savings, vacations, homes. Now people want to invest in businesses and companies. Whatever it is that you guys want to achieve, you got to at least have the foundation set to be able to execute that. God forbid if you were to die prematurely. Is there any questions or concerns from either Facebook or from the chat? Or should I move on?
Oh, you can carry on.
I'm sorry?
Go ahead.
Okay. All right. Go ahead and next slide, please. Okay. Types of life insurance. We have term, whole life, which is now being marketed as permanent. Cash surrender value. Surrender, I put parentheses on because they removed that word when marketing it. So people don't really know, or because I don't think anybody would want to surrender their cash, when it comes to their life insurance. But again, they do market it as cash value. and don't expect you to read what you sign or once you get a copy of your policy. And there's group life insurance. That's what you get when you're at work. You know, that's really important. I know I come across a lot of people who say, oh, well, I have one at work. You know, one, your job is not guaranteed, right? And two, you should always have your own personal insurance. By the time that you're no longer at your employment, either if you know, get fired or get laid off, or you're planning to quit, by that time you'll be older. You know, you may or may not be ill, and so those two factors can affect, you know, your rate of what you need to pay for your premium, and also your eligibility to even get coverage. Next slide. Okay, now what to consider when naming your beneficiaries. So the difference between the primary beneficiary and contingent beneficiary, does anybody know or would like to comment? You guys are a little quiet this one. I would like a little bit of feedback. Anybody know about your primary contingent beneficiary?
Is
No?
that the main person who would receive the benefits if you pass away, and then contingent is not permanent, so that might change depending on the
Yes.
situation?
So yes, you're right about the contingent primary. Yes, they are the first go-to person if someone were to die prematurely, and the contingent would be the secondary if the primary was deceased or no longer available. So I know when it comes to naming children, I know a lot of people would like to name their children as beneficiaries to their life insurance policies. But what they don't realize is that the proceeds don't or cannot go directly to a minor. So whoever is in charge of the minor, whoever has custody of the minor at the time, will be the sole proprietor or the sole beneficiary of the life insurance benefits. So we definitely do advise our clients to have a will in place, an estate, a trust, to be able to allocate their funds correctly. Okay. So do anybody have any questions in regards to life insurance? Do you guys have life insurance? Let's start with that. I know it's a very tough topic. No one, you know, wants to talk about life insurance, but it is the first thing that people look for, you know, when someone passes away. Okay, yes. Someone has a question. I believe I saw
Shawnee.
someone say, Shawnee.
No, not a question. I was just acknowledging that I have life insurance.
No.
Oh, yes. Oh, yes. That's good. That's awesome.
Then I have a question. So I
Mhm.
have life insurance through my job, and I recently resigned. So as someone who's going into being a consultant, what are the options of life insurance? Or can I continue to pay into the one that I currently have with my employer, but just separate it from working with my employer? What are those options look like?
Right. So normally when you have one through your employer, the employer owns it. So they could pretty much end the policy. They could change the amount of coverage, and or just, you know, pretty much end it period with you. So normally if you're no longer with the employer, you're no longer attached to that life insurance because it's called a group insurance. They normally don't give out individual ones for your family. So an option that one should have is to get their own personal one. You know, I tend to tell people to stay away from the bundle deals, you know, that they get through their car insurance. You know, those, I don't want to, you know, speak ill of anybody's company, you know, but I read what you sign. You know, once you get a copy of your policy, you know, especially the ones that are whole life, permanent, uh, look at the guaranteed page. I always tell my clients that, just pull up your policy, pull up the guaranteed page, see what the company promises you, not what the agent tells you. You know, so that would be an option. It was for you to get your own personal one. Again, we do educate our clients is to get term insurance and to invest the difference.
So what would be the difference between term and whole life if I wanted to look into having it just covered in general forever?
Right.
Mhm.
So with term insurance or with whole life, actually, what we tell our clients or what we advise our clients, one, why would you want to pay a bill for your whole life? Let's just go with that,
Mhm.
And the goal is for you to be financially free. So now they tell you guys, or they sell people on buying whole life insurance, and then you could save your money at the same time. But what they don't tell you is that your family does not get both of the savings and your death benefit. I actually did want you guys to drop a link that I provided from one of our coaches, explaining how the cash value insurance works. He's a little raunchy, but the way he explains it is very understandable, very comprehensible. So he does a great job. But pretty much, you pay for two products and your family only receives one. One on top of that, they tell you can borrow your money, because right now they're saying that, you are now considered your own bank. But last time I checked, when you go to the bank, do you borrow your money or do you take your money out when you need it?
Mhm. Gotcha.
Right.
And so,
So
yeah.
go ahead.
No, I was gonna say, so how does this then transfer over? How do we insure the income through this life insurance this
Right.
income that we already have?
Right. So insuring your income pretty much is, what our life insurance is. That's what people really don't realize. When you are getting life insurance, you're not just, cutting a big check for your family. You're actually replacing your income that, that God forbid you were to die prematurely. So if you have like a two parent household and three children, and one of the parents die, the life insurance is really supposed to kick in for the next 8 to 10 years, as if you were still here, to be able to sustain what you have your family currently going on. So when we do life insurance for our clients, we do go into, we go into a method called the DIME method, which is DIME. D is for debt and death, I is for income, M is for mortgage if you have one, E is for education. And those are the factors that we use to determine how much life insurance that your family needs and have currently going on. And my job is to get to as close to that number, but at a price that you could obviously afford, and we ask our clients, do you want your family, in worse shape, better, or pretty much to stay the same, if something were to happen to you prematurely? And most clients say they want them to be better off, I haven't had anybody said, they want them worse, but, pretty much with the mindset of not getting it and not having anything put away, that's pretty much what you're showing. You would want your family at least to be the same, if you were no longer here, to at least cover your income, especially if you have small children.
Right. And then we see that a lot in the Black and Brown community. I was fortunate, it's like we said, it's a touchy topic. When my mom passed away, there was life insurance. And a lot of my friends and family, that's not a concept that they even talked about with their family. So my brother and I, my father, we had the benefit of having that income and being able to each get something out of that when she did pass. And so that, like I said, I talked to my friends and they're, they don't talk to their parents about that, or it's not in place. So I'm glad that we're here talking about it now. And then I've also heard where people have said, like, if you take out large sums of money, it can kind of build this generational wealth with your families when you pass. So how does that work if you take out a larger amount? Say you take out maybe $500,000 or something and you're paying into it and then your family gets it. How does that kind of translate into building generational wealth?
Right. So pretty much, when you're younger, it's definitely better to get a whole lot more for a cheaper price. So getting $500,000 to $1 million, depending on your family needs and what you can afford. But yes, you can, once you were, someone were to die prematurely, that sum comes to you tax free. And, with us, we're your personal financial advisor. So we do advise your family how to properly allocate the money, into other investments to keep the generational wealth flowing, and we educate our clients on how money works. So they at least understand, just the basics, unless they want to know more, of course, we'll advise them more on how, to properly, invest their money, for later on. So then, they can, eventually break the generational curse of of poverty. But yes, you can get a large sum of money, depending on what you'll be able to afford, right?
Gotcha. All right, great. Thank you for this. And Omena, she has a question. So what
Yes.
happens when the insurance holder doesn't transition during the term life policy? What happens to the beneficiaries?
What do you mean, what happened to the beneficiaries if they don't
Um,
transition?
Hi,
Omena, you
Chantel.
wanna come
I'm
off? Okay.
here.
Good
I'm
morning.
here.
Good morning.
A divine rising. Hey, Valencia. So
Good morning,
the
Omena.
baby is sleeping next to me, and I don't want to wake him up, so that's why I typed it. But I
Okay.
hope you can hear me. So what
I
I'm
can.
saying is, okay, perfect. What I'm saying or asking is, I have a term life policy, right? But if
Right.
I don't die, let's say within the term itself. So let's say the term itself is like 25 years or 30 years, and I don't die in the next 30 years, or nothing happens to me in the 30 years. What happens to all of that money I paid in? Does that
Right.
mean my children don't get that insurance? Or like, yeah, just what happens? What happens to the policy, and what happens to the benefits for my children?
Right. Okay. So how old are you? Well,
Well, I'm
25
not
years
dying.
from now.
I'm not dying. I ain't dying no time soon, and no 25.
Right.
Well, let me not say that. I don't know. I really don't know
Right.
that. I'm up here. I'm joking, but what I'm saying, I, I mean, I'll only be 60 something. I'll maybe 70. Whatever. I'm
Right.
45 now. 25 years, I'll be 70. Yeah.
Right.
So, well, actually, I'll be 46 this year, so 71. But the point
Right.
is, I don't. Just what if I don't go?
Right. Right. Okay, so you'll be 70, 71 in 25 year. And how old would the baby be?
He will be 29.
29. And how much do you plan on having at the age of 71 in the bank? How much do you plan on having in retirement?
Well, I don't work a traditional job, sis, so I don't have a 9 to 5, but I definitely plan on having more than six figures, by then.
Right.
Um,
Okay, good. And
yeah.
in worst case scenario, like a range, what number do you think you would have?
I'd say by 70, I would really honestly, I'm gonna go on ahead. Child, I'd like to have a million. You know what I'm saying?
Right.
By the time I'm like 70, a million plus. But
But
you
worst
know,
case scenario, if you
I
didn't
would
sit
say
down on a
I
financial
would say 200,000 would be the least.
200,000. Okay, good. So now at age 29, do you think the baby will be still depending on your income, still living with you at that time?
I mean, I would want my children. My dad passed away, right?
Mm-hmm.
And my father had like all kinds of insurance and benefits and things of that nature. The
Right.
unfortunate thing is he didn't leave anything to me. Guess what?
Right.
That would have been nice. I'm in my 40s. If I would have got even just a third of what he had in all of his assets, child, I would not be where I'm at right now. I'd be in
Right.
a better position to be able to actually help take care of me and my children. So that
Right.
I just let's not. I don't even like. And yes,
Right.
they're gonna be they're gonna be okay because I would want. First of all, I'm about to set up a trust, so
Good. Very
there
good.
are a bunch of different trusts you can do. You can do one for insurance, and then you can just do a personal one. The one that I have, the term life policy that I have right now, I am going
Right.
to put that in a separate trust. Okay.
Mm-hmm.
And so, yes, it doesn't matter if my child is 29 or 18 or dependent or independent. I want them to be well taken care of as well as their children, especially when we're talking about
Right.
generational wealth.
Of course, of course. So again, so life insurance is just that, right? You just pretty much are covering your expenses what I like to, how I explain it to my clients is you're pretty much when you are in your grind mode, when you are building your generational wealth while you're building your financial house. So at that point, at 29 and you're 71, do you think that your financial house will be built at that time? You know, you
It
have
will,
your
but I don't know
savings.
how it will, but you're still not answering the question for me.
No,
I'm
I
just
will.
trying to
No, go
understand what,
ahead.
yeah. Because I'm just really trying to get to, I mean, yes, it will be built. And I just want
Right,
to know what happens if I'm putting all this money in the term policy I have right now. I just simply want to
right.
know, like, what happens to it if I do not pass away within that time range? What happens to the beneficiaries? Where does that money, like, what does it go? Right now, I'm only covered for, they're covered for 30,000.
Mm. Okay. So pretty much insurance is just that, it's just insurance. You know, when you get to the end of your term, the term ends. To put it in simplistic. Just like you have your car insurance, you have your phone insurance, you just pay into your premium, and once you no longer need it or the time has come for the term to end, the term goes, the policy ends. So this is why we educate our clients is to buy term, because you get a whole lot more of insurance for, you know, less amount of money, and then invest the difference. So at the same time as you're paying your premium, you will put your money in better investment vehicles that gives you a better rate of return. And at that time, as I was trying to, you know, just trying to, I just wanted you just to think a little bit, you know, not to say that you're not, Lord, you know, I don't want to make it seem, I just want you just to envision or just take you to where you would be at 71. You know, if you really are going to need the insurance, because life insurance is not meant to, you know, be something forever. Of course, we will want to leave more. I mean, who would not want more? But at that time, you know, we educate our clients. I actually work for Primerica. I've seen that you said you have it through Primerica as well. At that time, we will want you and your children to be financial literate, to have you know, better control of your money. So the life insurance is really just there just to be a cushion while you're building those assets. But once you know, you are 71, your kids are grown, they have better grips on their money. You know, if you're saying that you know, you're gonna be at $1 million, and I believe you, you know what I mean? So, you know, if you say you're gonna be at $1 million, I'm sure your children will probably be at $3 million. The way that you know, you speak that you want your kids to be at ease and have to worry about for nothing, I'm sure they're going to be, you know, at a better position at 29 than we both were. You understand? So the insurance at the end of term, once you know, you pay it, it's just there just to, you know, to be a cushion while you're building your assets. Once it's done, it's finished. So it's the same thing, you know, when it, again, you know, when it comes to your car insurance, your medical insurance, you're just paying into it just in case something were to happen to you prematurely.
So, okay, to be clear, you're
Right,
saying once it's done, that's it, you all, because I don't want to take up too much time. And this is the last thing,
right.
because I already have it. And I just want to make sure that it makes sense. It took a long time for me to actually sign up for it because I personally was like, I think whole life is better. So what you're
Hmm.
saying is at the end of the term, all of that money I paid in, they don't get any of those benefits if I don't pass away.
No, if the term insurance is no. I mean,
Thank
once
you.
it's right, once the term is over, then that's that.
But how is that actually better than the whole life? Like, I mean, because you're not able to borrow from it right now. Like, it's not like I can take from the insurance policy right now and invest it in other assets.
Right. Um, so pretty much, again, when you bought that policy, what the agent should have done was to open up investments accounts for you. So we have different accounts, because what whole life does, they put both the investment and the insurance together. We really can't call it the investment. They call it a savings, but it really doesn't have like the proper tools to be called an investment vehicle. But they pretty much put it together, and they're saying that you can borrow your money. But what they're not explaining to you, if you were to borrow, let's just say you have $100,000 policy with whole life and you have $10,000 saved. If you take that whole $10,000 from it, because it's your money that you're saving, right? They're saying that you can save it. God forbid, if you needed to use it, you pull it out. Your insurance is no longer valid, because that's your premium that you're paying. There's no investments to grow. There's nothing to be able to keep that policy open because you're taking your money out of that insurance. It's just your premium that you're paying into it. So what we tell our clients, that does that make sense? Because if you're going to be borrowing your money, you should still, what does that have to do with your life insurance? Again, we educate our clients to separate the two. You have your investments accounts, and then you have your life insurance. So your investments accounts would be your short-term money goals, which is your emergency funds. If something were to happen, to your car, you need to fix, something, anything that you would need to. We have your college funds set up for your children. A lot of people don't want to get a 529. They may want a UGMA or a UTMA, where you could actually leave money and assets to your children when they get older. Your retirement goals, your financial goals, if you want to, buy into a business, all those are available to you to be able to put money into it, so it doesn't, potentially affect your life insurance. I don't know if that answered your question.
You still there, Amina?
I am. I was just typing in the chat.
Okay.
It's clearer now. Chantel also commented, so it's clearer. I just, but it wasn't clear at the time that was going to be a policy. It's almost like you're paying into something that, for me, how I see it, that I really may it may not be beneficial, right, to me and my children, because I'm not putting money in something to not have it, regardless. It should be like, whenever I transition, they receive what they receive. And I thought that's what I was actually signing up for until yeah. So it's
Go
okay.
ahead.
I mean, yeah, you did answer my question.
All right.
And
So
Chantel made it a lot clearer.
So what you can do, I know they're gonna drop my contact information within the chat. We could actually go over your policy and really go into depth what it is that you purchase, what is it that you are looking to do for you and your family, and I could better explain to you what it is that you would need to be able to provide what your family needs. It just seems that maybe it wasn't clear at the beginning what they were doing for you, because again, we do allow our clients to buy term and invest the difference. There's more clauses when it comes to the whole life policy. We're really going to get into it into part 2 next week. This was just, something just to open up everyone, just to give them like the basics of having insurance for their family needs. But they'll definitely drop down my contact information, and we could go into it, very deeply, and make sure that you have properly what you need for your family. But I do appreciate your questions and your concerns, and I hope to hear from you.
Awesome. That was great. Thank you, Amina, for opening that door. And I'm sure
Yes.
everyone got different pieces of information that was helpful for them with that. And then we do have another share, and we're at 7:33. So,
Okay.
yep. So let's go with Teresa from Facebook. My son is 24 and not insured. He was a rider on my policy years ago, if that's the correct term. As an adult, can I take out life insurance on him, or does he have to do it himself?
Yes. So the rules are a parent can take life insurance on a child, and a child can take it on a parent as long as they have, each other's permission. So yes, you can.
All right. And let's take one more question from Tracy Ann, who has her hand up.
Okay. Hi, Tracy. Thank you.
Hi. Thank you so much for this. I have a few. I've always been reluctant with life insurance, so I have a few questions. When you say that term life, you invest the difference, I got on about 10 minutes late, so I want to clearly understand what that means. So I don't know if you explained it already and I just didn't hear.
No,
so
it's
I'm
fine.
sorry.
Listen, it's fine. I've been doing this for almost 10 years now, and I was a client of whole life. And, again, I wanted to, touch more based on it next week. on how I
Mhm.
pretty much got screwed, but as far as investing, the difference, yeah, so we just separate the accounts. You buy term insurance to pretty much cover your assets or while you're building your assets, and then you're putting your money into actually building your assets. So your emergency funds, your retirement goals, whatever that it is that you want to accomplish financially, we actually assist you with that. Let me, go to say, to everyone, we offer our clients a financial needs analysis, which we pretty much go over what you have coming in as far as your income and what you have going out as far as your debt, as far as your expenses, and then you tell me what it is that you wanted to achieve at the allotted time that you want to achieve, and then our system will generate a plan, like a GPS, a step-by-step direction to be able to reach your financial goals. So that's what would be as far as your investment. So now you're investing into what it is that you want to achieve later on. If you want to have $5,000 in your emergency funds, if something were to happen, we try to advise our clients to have at least 3 to 6 months of your expenses within your emergency funds. Again, if you have small children and or you want to obtain a mortgage or pay that off, that's what we offer within our financial needs analysis. I hope that answers your question.
No, I'm sorry. So I'm gonna
No, it's okay.
reword the way I'm asking this. So say for example, I ask for a policy that's worth 50,000, right? And then
Right.
for over 30 years. I'm not gonna do the calculation, but say for example, you guys it's $50 a month, right? So
Right.
the $50 that I'm paying, that would go towards the term policy. And then
Right.
you guys would set me up with say like an advisor or whatever, and they would say, if you want to have $5,000 in your savings account within the next 5 years, you would need to save, I don't know, $30 per month. Is that what it would be? Is that what you're saying when you say invest the difference? So the whole 50 would go towards the term, and then you basically would tell me how much I would need to save in order to have money for my emergency fund, or is that what you're saying? Yes.
Yes,
Okay.
that's exactly what
And
I'm
then
saying. Yep.
okay. So the other question I have for you is so I'm not the other question I have for you is it says when you said that whole puts both the investment and the life insurance together, and if I wanted to borrow from it, basically you're saying that I would it would stop my policy. That's what you were saying, whatever money that I
Right.
had in my account for whatever I needed it for. Is there a way to restart the policy? Is there a way to, would I have to go through the whole process again to restart the policy?
To restart that policy, yes, because the
Okay.
policy now lapsed, yes. So then at
And
that time, you would possibly be older, or you may or may not be in a good shape as far as health wise, and then that would affect
right.
what you would need to pay into it next. Right.
And then another question that I had is when you discussed the whole policy, you said that my family would either be eligible for the burial fund or the benefit, or basically my beneficiaries would receive the money. So this is basically my question. So like say for example,
Mm-hmm.
if God forbid if I die right now and I have a whole life policy, my son wouldn't receive. It would be either if my family didn't have the money to bury me, they could go to the policy holder, if it was Primerica, and say, hey, we need money to bury her. And they would say to Primerica would say, if you are requesting burial money, you can receive that tomorrow, but then your beneficiary won't receive any money. Is that what you're saying?
No, you would just
Okay.
receive your whole death benefit, right? God forbid
So
if you were to die prematurely, yes, you would
yeah.
receive your whole death benefit.
So so I would, when you say that, I don't work in insurance. So when you say like, it's America. So sometimes the way people word things is like, it's like a lawyer, like, it's not like clear what you're really saying. And I'm not familiar with the terms of life insurance. So when you say basically I would receive he would receive the whole insurance. What does that mean? Does that mean if I had $100,000 policy, he would receive the entire $100,000 policy right then and there?
Yes, I mean, it takes about, 2 weeks up to 14 days to receive the money. But yes, your agent would be the one to deliver the check to your beneficiaries if something were to happen. Yes.
Right. So when you said that they would either receive the burial fund, is the burial fund and the policy that my beneficiary would receive the same thing, or are they different?
Yeah, so I'm hearing about the burial expenses policies. That's something, I believe that's another whole life type of policy that they're trying to pretty much sell you on. But so that's a different whole different policy. So pretty much if there's the burial funds, you would receive the burial funds. But what I've learned about that is there's very tight stipulations to be able to receive those funds if you die within a certain amount. Normally
Right.
people get that when like their parents are already older and stuff like that. So depending on the time frame when they die and when they got the policy. But when you're actually getting a term life insurance, we like to ask our clients, well, how soon would you like to be covered? Obviously you would like to be covered today. So while you're going through the underwriting process, something would have happened to you prematurely, you were to be qualified for that insurance, your family would get those death benefits, which is the whole death benefit. If it was $100,000, yes, they would get the $100,000 check.
So I think that I missed you were stating the cons. When I was listening to you earlier, I wrote down what you said, and I just want to get that part. And I think I may have misunderstood what you were saying. You were saying the con to whole life insurance versus term is that you said something about either burial or your family receiving the money for the policy.
Oh,
you said that.
okay.
You said something about that, but
It
so
was your
basically, what's the con?
savings.
Yeah.
It's the savings portion, right?
Okay,
So
okay.
they sell you right on the savings and the death benefit. And what people don't realize that your family does not get both. This is why it's called cash surrender value insurance. They don't market the surrender term to it, but pretty much you do surrender your cash once something would have happened to you prematurely. So this is why we advise our clients, do not use life insurance as an investment tool, because you know your birthday, but you don't know your death date. Something were to happen to you, your family does not get both the death benefit and your savings. That's why we
So
advise our clients to separate the two. No, it's okay.
When you say that, so if I'm buying into a life insurance policy, like a whole life insurance policy, they'll sell it saying that you can also save your money, which is two separate things. That's what you're saying. Is that what you're saying?
Within the whole life, they're saying it's going to be combined as two.
Which
Go ahead.
Sorry, which means what?
There's both the savings and your death benefit. The savings portion, they're calling it the investment vehicle, and your death benefit. So as you're paying your premium, which is going to be higher, because they're saying that they're going to take some for your life insurance and some for your death benefit. What they're not explaining to you is that if something were to happen to you, the premium that you're paying towards your family, which is or your savings, not your premium, I apologize, which is part of your savings, your family will not get that. If depending how close the numbers are, so if you were to have $100,000 of death benefit and you have $90,000 in your savings, they'll ask you to choose which ones do you want, because you are not guaranteed both.
So back to that question I had about term. So when they sell me on the whole life insurance policy and they say, okay, your premium for your whole life insurance is going to be $50 a month, and
she cut out.
Lost her. Yeah,
okay, I thought it was me.
Yeah, I don't see her in the space either.
Great questions, though. I'm so appreciative of her and Omena and everyone. Yes.
Awesome. Okay, I'm sorry we lost you. Okay, maybe she'll come back on. But we are at 7:44 as well.
I'm sorry.
Okay.
I'm sorry. I didn't hear
there you
anything.
Okay,
Yeah,
there
I
you
don't
are.
know why it went out. Okay. So I'm sorry. I think the last part you heard me say was that, is it two separate amounts? Is it like $50 towards your premium for your life insurance, and then we suggest you put $30 a month towards your savings? Is it the same as the way when we were discussing about the term? Do they sell it that way as well?
Um, they
Or do they
don't
separate it
necessarily.
from your premium for you?
See, we don't sell whole life. So I don't know how
Oh,
they
okay. Okay.
yeah, how they would they would market that, but they would quote you on a price that you would have to
Mm-hmm.
pay towards it, and then they would separate, what's going towards your premium and what's going towards
Mm,
your insurance. And what they
okay.
don't advise you is that is the first 3 years you're actually
Mhm.
not saving, you know what I mean? So they actually keep the
Right.
money that you're investing in, and then the money starts to accumulate. So this is why I advise my clients, when or if they are purchasing or if they have won a whole life policy, just go to your
Mhm.
guaranteed page. It actually shows you exactly how much money you're investing in, and you just do the calculation if the numbers even make sense to you.
Okay.
Okay.
Okay. Thank you so much, Valencia. I know this is
Of course.
hard to do. I know this is hard to do because it's like we
No,
grilling
it's
you, but I really
okay.
appreciate you being authentic and honest. I really
I
do.
I appreciate your questions, honestly. Again,
Okay.
before I knew about this, everyone, I was in the medical field, and I got whatever my job offered to me. At the time I had a small child. My daughter was about 3 or 4 years old, and this is what the job offered me. And I told the guy, I wanted $1 million. I didn't know I was only 28. I wanted $1 million, for my daughter. God forbid something wouldn't happen to me. And that was that. Okay, this is what you had to pay. But once I was introduced into the insurance industry, and I actually went to class through New York State, they were explaining to me the difference between whole life and term. And I'm sitting here thinking, well, what is it that I have? Because I really don't know what it is. I just knew I just wanted $1 million. And come to find out that, the insurance agent did sell me a whole life policy. God forbid if I would have died prematurely, my daughter would have gotten only $1,200. And within the first 3 years that I was putting my money into it, they kept it. So there was no money for me to retrieve back. So with that alone, with my own personal experience, I made it my mission to be able to learn all that I can and be able to put that information out, because no one is teaching us these things. So, I'm here, as you said, to be authentic and as real as possible, to be able to properly explain to you guys how the insurance industry works, and to make sure that you guys do have the proper coverage for your family. So I do appreciate you all coming and asking these questions. It's not easy, but it's definitely worth it, because we as a community definitely need to do better.
Yeah, thank you, Valencia, for sharing this information. And we had like
Thank you
mini
for having me.
discovery calls, right? So that will take us into your special offer for the group this morning. So take it away.
Okay, so the first 3 participants to email me that you do need a personal financial needs analysis. Again, that's a GPS for your money, what you have coming in, what you have going out. You will receive a free 30-minute discovery call with me. So the first 3 participants, just go ahead and shoot me an email, and just put in the message that that you need personal financial needs analysis, and I am here to help you. I appreciate you all coming and joining the call, and I appreciate you guys allowing me to come into this space to educate you.
Awesome. And so that information will be dropped in the chat so that you can email Valencia.
It's hot out here.
You're almost done. All right. How can they keep in touch? How can they contact you?
All right, so my mobile number, which is my own personal mobile number, I'm here for my clients at any time of the day. Just be respectful, I have a baby, but at any time of the day, I work from home. So it's 845-793-9080. You could follow me on Instagram, which is Valencia_Kingdom Builders, actually with an S. And my email, noel.valencia514@gmail.com. Stay connected.
Awesome. Thank you, Valencia, for such an informative session. And come back next Wednesday for part 2, where she'll be
Yes.
sharing additional information. So I know you all had questions, so come with your questions for next Wednesday as well. And
Yes,
we love to
definitely.
pour onto our facilitators for all of this amazing information that they drop into this community. So you could do that on a monthly basis, automated love offerings. These links will be dropped in the chat so that you can sign up for either $25, $50, $75, or $100 a month to pour into this community and bring in even more facilitators to this space. So next up tomorrow, we have Martine, and she's bringing her daughter along. They're going to talk about mommy and daughter things. So they're going to go over their own relationship and how that's been over the course of years. And now she's sending her off to college. So we're going to go through their transition together and how things are going for them as mother and daughter. Also, welcome to all of the newbies in the space. Thank you so much for joining us and coming into a community where we come to learn, elevate, and ascend. So thank you to those of you who brought your new people on the line this morning. Please keep inviting, and all of the new people keep inviting as well and come back.
Yes.
And you can catch us Sunday, Tuesdays, and Thursdays live on Zoom from 7 a.m. to 8:30. Or you can get just a little bit right before work and start your day on Mondays and Wednesdays like we did today from 7 to 7:30. We go over a little bit, but you get a taste of the Woo community for about 30 to 45 minutes to start your day off. And you can always find us on Facebook and watch those playbacks if you can't watch us in the morning. And if you want to receive the text alerts, you're going to text Woo Nation to 74121. All right, and it's summertime, so you can't be out here without your Woo swag. So put your laptop in your laptop case and put that in your tote bag and bring your journal with you and your water bottle. Go to the park, set up at the beach, whatever you have to do, and show everybody your Woo swag, the community that you're a part of. And you could do that with the link that's in the chat, so bit.ly/Woo swag. And thank you for everyone who joined us this morning, who's been joining us since the start of this, who's been on here all week. Register for our upcoming week, bit.ly/wake up movement. Then we have our 2 Facebook pages. One is the private and one is the public pages, so you can be added. And then follow us on Instagram at Wake Up Everybody Virtual. And we are building up our YouTube library, so bit.ly/Woo on YouTube. And then you can always reach out to us with any questions, comments, or concerns at info.wakeupseries@gmail.com. All right, and at this moment, we are going to unmute ourselves and show Valencia some love. All right, so.
Gratitude,
Yeah.
gratitude.
Thank you, Miss Valencia.
Thank you so
Thank you,
much.
Valencia, for the
I,
presentation.
You have a
Thank you.
beautiful, beautiful day.
Thank you,
thank you.
Valencia.
Thank you.
This has
Great
always
job.
been
Great job.
subject matter
Wonderful
Information.
Let's move
presentation.
forward,
interest.
everybody.
We
Have a
need to
blessed day.
know
God
about
bless
this.
y'all.
We
Thank
need
you
to
so
know,
much.
like, we just stop
And
taking our
Thank you,
little
everyone.
nickel and giving it to these whole life people.
Thank
And like you
Thank
said,
you,
invest
Valencia.
that difference ourselves. Thank you.
Information.
Thank you.
Bye.
yeah,
Have a great day,
Bye.
family.
Have a great day, everyone. Thank you.
thank
Appreciate you
you.
all.
Let's
Everyone on
move forward,
Facebook as
everybody.
well.
Good morning. Have a
Good
great day.
morning. Have a great